Today, we're diving straight into a massive collision between geopolitics and global markets. We are unpacking the current standoff in the Middle East, specifically zeroing in on the sheer economic impact of a modern military blockade. It's a huge deal.
Okay, let's dive right into this, because this right here is the exact question keeping Wall Street awake at night. Could a single military decision, happening literally thousands of miles away, fundamentally reshape our global financial markets? You see, when a major shipping artery gets choked off, it completely stops being just a military operation. It instantly becomes a profound economic story that affects all of us.
To really grasp the scale of what we're looking at, just listen to how President Donald Trump has defined this U.S.-Iran standoff in the Strait of Hormuz. He literally called the naval blockade a wall of steel. That kind of absolute rhetoric, well, it signals a level of military commitment that instantly puts global supply chains on absolute high alert.
And what makes this situation so incredibly urgent for the markets is the timeline. U.S. Defense Secretary Pete Hegseth recently confirmed that the Navy actually has the assets to maintain this blockade indefinitely. By rotating ships and personnel in and out, the Pentagon says they can sustain these operations without burning out their forces. So, investors? They are no longer pricing in a quick short-term skirmish. Nope, they're bracing for a prolonged, completely open-ended period of intense economic pressure.
Now, before we get too deep into the financial fallout, we really need to clarify what's actually happening out there on the water, because there's a massive difference between an embargo and a blockade. An embargo is basically a sanction, right? It's a policy decision made in an office. But a blockade? Under international humanitarian law, a blockade is a literal act of war. It relies on actual physical military force to completely block the flow of goods and people in and out of a specific area.
You know, it's so easy to just stare at red and green lines on a stock chart and totally forget the physical reality on the ground. A blockade means heavy warships, armed forces, and military checkpoints. It is a stark, very real contrast to the abstract numbers bouncing around on a trading screen. We are talking about the physical, forceful enforcement of an economic boundary.
And since this is an act of war, there are strict rules to the game. International humanitarian law explicitly requires free passage for humanitarian relief. It strictly prohibits the starvation of civilians as a method of warfare. Essential survival goods absolutely must be protected, no matter what the military necessity might be. So dealing with the severe humanitarian and economic fallout isn't just an afterthought, it's legally required.
Which brings us to the perspective of the Iranian government. Iran's UN envoy in Geneva, Ali Bahraini, has formally warned the UN that this blockade is severely impacting their civilians. He argues that the deprivation of food and essential goods caused by the U.S. blockade violates international law and actually constitutes a war crime. Because of this, Iran is demanding official UN monitoring of the humanitarian fallout.
So, how did we actually get to this point? Let's look at the timeline. The whole conflict kicked off with U.S.-Israeli strikes back on February 28th. By April 13th, after Iran effectively closed the strait, the initial U.S. naval blockade was put in place. There was a temporary halt that ended in mid-June, but then U.S. Central Command, CENTCOM, officially resumed blockading maritime traffic on July 14th. And honestly, that brings us right to the critical juncture we're at today.
Now, this next number is exactly why the entire global economy is holding its collective breath right now. 20%. Just think about that. 20%. That is the share of global oil and liquefied natural gas shipments that normally pass through the Strait of Hormuz. When you literally drop a wall of steel in front of 1/5 of the entire world's energy supply, the economic shockwaves aren't just a possibility, they are absolutely guaranteed to be massive.
And we are already seeing the severe economic casualties hitting the regional supply chain. Recent data from Lloyd's List Intelligence reveals that Middle East Gulf container volumes have absolutely plummeted. Imports into the region are down 21%, and exports? They have dropped a staggering 31%. This is what the immediate, choking effect of a physical blockade looks like on regional trade.
Let's translate those percentages into physical reality for a second. This disruption has wiped out an estimated 1.8 to 2 million TEUs, so that's standard shipping containers, in just the first half of 2026 alone. 2 million containers. Try to picture the millions of consumer goods, the tech components, the raw materials that simply didn't make it to their destinations. It's staggering.
And remember, the U.S. military is actively, physically enforcing this. According to CENTCOM data up through August 12th, U.S. forces have redirected 59 commercial vessels that tried to breach the blockade,
They've actually disabled 3 ships by force, which included firing missiles directly into the engine room of a Panama-flagged vessel, and they boarded 2 others. This is how the supply chain is being physically choked off. So, what happens when kinetic military activity meets global shipping? Massive financial losses. Marine insurers estimate that this conflict has generated between $1.5 and $2 billion in claims so far. That stems from roughly 70 marine casualties since the end of February. And frankly, insurers are terrified. If this drags on, hundreds of trapped vessels could file total loss claims, which would potentially push payouts into the tens of billions of dollars.
Ultimately, here's how this whole thing ripples out to you and me. It's like a domino effect. Step 1. The blockade disrupts global shipping routes, causing huge inefficiencies and much longer voyages. Step 2. Because of those detours, freight and fuel costs skyrocket. Step 3. Businesses aren't going to eat those costs, right? They pass them on to us, causing consumer inflation to climb. And finally, step 4. Central banks like the Federal Reserve are forced to adjust interest rates to fight that inflation. It's wild to think about, but a military action in the Gulf literally influences the cost of borrowing money in your hometown.
Now, all this macroeconomic shifting creates some very distinct winners and losers in the stock market. On one hand, defense companies usually see a lot of increased attention during geopolitical tensions. And energy stocks? They can obviously benefit from higher oil revenues. But on the flip side, fuel-reliant industries like transportation are facing huge cost pressures. And get this, even the booming tech and AI sectors can take a massive hit. Because they rely heavily on future growth, they're incredibly sensitive to the higher interest rates that come with inflation fears.
When investors get nervous about these sector shifts, they start looking for places to hide. Gold, which is your classic traditional safe haven, is naturally seeing increased demand due to this prolonged geopolitical uncertainty. Bitcoin is kind of a wild card here. Sometimes it acts as a digital store of value, but if investors get spooked and become really risk-averse, crypto can experience some absolutely severe volatility.
So how do we get out of this? Well, the diplomatic path out of this economic maze is incredibly steep. Iran's top security officials have laid out some very strict conditions to reopen the strait. They're demanding a full U.S. military withdrawal from the region, a permanent end to the blockade, an unconditional lifting of sanctions, and complete compensation for war damages. Meanwhile, the U.S. is not backing down, insisting on an acceptable deal before they lift the pressure campaign. It's just a massive diplomatic deadlock.
So what should you actually take away from all this? Let's look at the 2 very different futures the markets are trying to price in right now. First, the bull case. This assumes diplomacy actually works, shipping stabilizes, and inflation stays contained, which would be a huge boost for risk assets and growth. But then there's the bear case, and this is what keeps economists awake at night. This scenario sees escalation continuing, oil prices climbing sharply, and inflation spiking, triggering severe global market volatility as those supply chains fracture even further.
Which brings us to our final thought for today. The U.S. military says they can maintain this blockade indefinitely. But as marine insurance claims hit that $2 billion mark, as container volumes continue to plummet, and as massive inflation threats loom over all of us, how long can the global economy actually endure a wall of steel? Thank you so much for joining me for this explainer. Keep a really close eye on those shipping lanes, and I'll see you next time.